Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we are talking about BHP. BHP is a diversified commodity resource developer that's based in Australia, and I think that you're going to find this very interesting today. So let's go ahead and begin with the daily stock analysis. All right, the very first thing we want to look at in looking at BHP, first off, I want to tell you something real quick, if I could, please. BHP was brought to my attention by one of you, the listeners. I will take requests, just like the DJ. If you have a stock that you have an interest in, that you want to look further into, let me be your resource. I can't do all the requests that I get, and I know there's some of you out there that have made requests that are wondering if I'm going to get around to yours, and I suggest this to you. Keep checking back on a daily basis, and I will try to get to yours as much as I can. Today was brought to me by one of the listeners, and I was really excited to learn a little bit more about BHP, and I think that you're going to find it very interesting too. It actually started during the late 1800s in Australia, and the BHP stands for Broken Hill Proprietary. And it sounds like a small operation. It's really not. You're going to find out that this is a huge, huge company that you might not be familiar with, but by the time you're over with this today, you're going to know a lot more about it. So let's go ahead and look at what I've prepared for you so that you can get a little bit better understanding of what BHP actually does. Now, I will tell you this too. Look, I help people with the retirement plans. And if you want to learn more about how to plan for retirement without running out of money, go over to my website at richardsfinancialplanning.com. You can learn more about that. So let's go ahead and begin and look at what is going on at BHP. Did you know that there was a $124 billion company out there that mines, that develops resources, that brings oil out, that brings resources to the world? And that's really what BHP does. One of their biggest areas that they supply is actually China. Now, this is the way that we're going to look at this stock today. And this is the way that we look at all the stocks that we analyze here on this channel. The first thing we do is talk about the stability. Then we're going to talk about the earnings. And then we're finally going to talk about the competitiveness of the companies that we're discussing. Now, when I talk about a company's stability, I refer to a thing called a moat. And I didn't come up with this idea. This is a Warren Buffett idea. And his quote is right here. It's, "In business, I look for economic castles protected by unbreachable moats." And that's really what we're going to discuss today, to see what type of moat actually that BHP does. And some of the information I'm getting from Morningstar, and some of it comes from other resources. And then Morningstar's opinion, they really don't think that BHP has a moat. They look at it from the standpoint and say that the lack of growth and expansion in the iron ore operation, especially compared to Rio Tinto, which is another Australian developer of natural resources, and Vale, which is based in Brazil, when they're competing with those companies, it's very difficult to do that because they haven't grown in the recent years. Now, I say recent because in a moment, you're going to find out that there is a competitive advantage that BHP does have. They do not have a cost advantage when we're talking about petroleum, copper, coal, and nickel. The petroleum, if you look at it around the world, the petroleum industry is kind of depressed. And I think that we could all agree upon that, looking at what's going on with some of those companies. So although it's a diversification, it might not be to their advantage right now. If we look a little bit further, the biggest part of BHP is their iron ore mining business in Australia. And that is what would be considered moat-worthy. They have some significant cost advantages in that. Their other operations, not quite so much. Now, look, I want to show you the spaghetti graph here of some of the boom years. When I say boom years, what I'm talking about is going to be around 2002. Iron ore was selling for about $40 per metric ton. And when we got into the boom, that was after the bust worldwide depression in 2008, the Great Economic Depression. When we got into the time period around the after 2010, when China started to grow significantly, we saw the cost of iron ore go up to about $200 per ton, and that's metric ton. Now, in comparison to today, the last check I saw, the cost of iron ore right now is at about 121. So we're down from that standpoint just a little bit. Now, here's where some of BHP's big cost advantages come into play. Prior to 2002, they have a lot of their operations that were developed. They have a lot of the mining operations, the rail systems, all of those things are in place, and they've been in place prior to 2002 when they were paying around $40 a ton for iron ore. And also other natural resources to develop their operations was built at that point in time. Now that is going to come into significant play when we start to talk about how much profit this company makes. When we look at what the bulls, these are the bullish analysts are saying about BHP. They're saying right now that BHP's growth is going to be fueled by the growth in China. Furthermore, their cash flow is diversified. Now, I'm not sure if I agree with that 100% because if we look at the petroleum business right now is that proverbial albatross around their neck. It's weighing them down. And furthermore, when we look at the cost, we talked about that just a little bit ago. They have a low cost advantage because of the development that they've had. And in a few moments, when we look at their financials, you're going to see that that's a big benefit. Now, what are the bears saying? What are the bearish analysts saying? That's the next question. The cost of expansion right now is actually expensive. Even though the borrowing is cheap on a worldwide basis, you still have to spend a lot of money to develop. And the pandemic is actually going to slow the expansion, even though that in China, the pandemic is not really hurting growth as much. Another thing that you might consider that some of these analysts are saying is that if you're just looking to benefit by the cost of iron ore, you may be better off looking at the actual investment into the commodity itself. Now, I'm not telling you to do that. I'm just reporting to you that that's what some of the analysts are saying. Now, let's look at the financials just for a real quick moment. If you look up in the left-hand corner here, you'll see this is revenue and net income. Revenue is in blue. You don't have to be a rocket scientist to see that 2018, 2019, and the 2020, their revenues have been exceptionally good. Their balance sheet is very good. The assets that they have are far outweighing the debts that they have, which is a significant advantage going forward. And their cash flow is actually very good. So from a financial standpoint, this company is in really good shape. Now let's look at what the valuations are according to some of the different analysts. Now, I didn't get a lot of feedback from some of the other analysts, so we're really just going to center on what Morningstar is saying here. We don't have a lot of cost information from the other analysts. Right now, Morningstar is saying that the fair market value is actually $44. So we're current valuing it at $49.55. So actually, this is actually incorrect. This is not a discount. This is a 12.61% premium. The color's red, just the word is incorrect. But Morningstar is rating it at a 3-star. Now, I call this kind of stock GARP, growth at a reasonable price. I think that they have the potential for growth going forward, and you're going to see in a moment too that their dividends are outstanding. But you might want to consider some diversification, and we'll talk about that too in just a moment. When we look at what the average analyst is saying, the average analyst right now is saying that this is going to be a strong buy. There's really only about 7 name analysts that are following this particular stock. None of them are saying that you should get out of it. They're saying either hold on to it or else they actually have a strong buy on it right now. Here's a really good part. Now, look, I love dividends. You know I love dividends. Listen to this. Yep, I love dividends. I hope you do too, because if you're retired and you're looking for income, dividends out of stocks are a great place to be. But I want to caution you on this. I didn't graph it, but I can tell you that the dividends, you'll see it in red, vary a lot. Some years they'll be up, some years they'll be down. It's not a steady dividend. It's not like some of the other stocks that we looked at where that you can depend upon the dividends. The dividends do vary. It's 4.57%, which is a pretty good dividend for a stock, but still it has the potential to vary quite a bit. Now, if we look back over the past 5 years, they've actually done outstanding. In 2015, they were selling for $23.80 a share and a hair. And the average rate of return on this over the 5-year period has been 15.79%, a total of 108.17%. And it closed today at 49.55. So the stock is actually doing exceptionally well. Now, I want to compare this to some of the others that are out there. BHP's dividend is at 4.57%. When you compare that to Rio Tinto, which is another Australian mining operation, they have a 6.72% dividend. And when you compare it to Vale, their Brazilian competition, their dividends at 6.41. And you can actually see by looking at the spaghetti graph of the recent years, this is the 5-year history, that Vale has actually exceeded over top of both Rio Tinto and BHP significantly. So if you like the idea of BHP, you might consider diversifying through some other companies like Rio Tinto and Vale, especially if you're looking at it for a dividend standpoint. Now, I didn't do the research into it, but if I had a client that was coming into me and said, I want to get income and I want to look at some stocks like Rio Tinto and BHP and Vale, I would tell them you want to make sure that you're diversifying and that you analyze when those dividends have varied, because these companies pay dividends with different timetables. So if you're looking for income, you want to be very, very careful of that. Now, the last thing I want to look at with you is I want to look at the options on this, because the options can kind of give us a little bit of feeling for what the price may be. When we talk about puts and calls on different stocks, these are sophisticated financial instruments, and usually people understand a little bit more about finance, about way things are working before they put money into these. Sometimes they're professional investors, sometimes they're just sophisticated investors. So how do we read this? How can you understand that? If you look at the spitting green circle, the one that I've got the cursor dancing around on right now, it says 55. Remember, the price is around 49. So if I buy a call, remember a call is a contract. You're going to call to buy a particular stock. And what the call is going to do is has a strike price of 55. So what this is telling me right now is that there are 2,491 calls that are written currently with a strike price of $55. So what these people are doing is they are looking to buy. In other words, if it goes, they're hoping that this is going to go over 55. Maybe it'll go to 60. They're looking for it to go over 55. And at that point, then they'll exercise that call and then they'll be able to make a profit based on it. Now, on the other side of the coin, when we look at the puts, remember a put is going to be a contract to sell something. And in this particular instance, if you see the circle that's going round and round here, you're going to see that there are 1,881 November 20th puts that are written. And what that means is that at $50, if we look above it right here, $50 is the strike price. So what these people have been doing is they're thinking that I want to be able to sell my stock at $50. Now, sometimes you don't have, it's not just, they're not going to exercise it and actually sell the stock. They're going to sell the contract. And if it goes below $50, then they're going to make some money off of it, because the value of this, which is right now at $2.80, or else that was the last price, you're going to find that that price is going to either it's going to go up, it's going to go up as the price goes down. Okay, and vice versa, when we're looking at calls, that's the way that they can be manipulated as well. So that's a little bit of education. So if you're looking for a price right now, if we're trading at about $49, we're pretty fair priced. If you're looking for it to go higher, then you want to go ahead and buy into it. If you're thinking that you're looking for a lower price, then you're going to hold out just a little bit. I can't tell you exactly what you should do, but I can tell you that this is a pretty solid company. It's $124 billion. And I think that they've got a pretty good future. If we look at the growth potential that is in China right now, if you're looking to diversify into something that's connected to the growth in China and is not in China, because I know that there's some people out there that might think, well, if we have another Trump administration that's going through, they may put more restrictions on the United States doing business with China. But this is a different play, because this is a company that is based in Australia, and this company is doing business and profiting from doing business with China. So it's a little different thing in there. You have to make some of these assumptions for yourself. That's the stock market game. Okay, that's the end of today. Keep watching tonight, and we can find out hopefully who our president is by tomorrow, and we'll see how everything else works. Come back in tomorrow and we'll look at another stock. If you have any requests, put them into whatever platform that you're listening to me on, and make sure if you're on YouTube that you like me and that you subscribe to the platform. Do the same thing if you're listening on Facebook or on Twitter or Periscope, and come over and see me at richardsfinancialplanning.com. Till then, I will talk to you tomorrow. Have a good election eve and be safe.